All right, let's jump into it. Time for a bit of a weekend wrap. So give us a bit of a chance to just see how things sort of finished up overnight, and obviously for the week, and yeah, see sort of what we've got coming up for the week, and see if we can sort of pick out any trade ideas and some sort of themes amongst the market. So look, first of all, just sort of finish up end of last week sort of data, just looking at non-farm payrolls, because this was quite an interesting sort of print that came out. And if you watched my analysis yesterday, this is literally exactly what I said said would happen. This is last month's revised down to 185, expectation 138, and came in positive. So my call, obviously, as I said, again, not really based on a great deal, but my feeling of how these things would play out was more that sort of this number would be revised down. This would be above expectations. It's exactly as we saw, though the price action didn't reflect this. Well, not immediately anyway. It's quite interesting, sort of, the price action around this kind of thing. Certainly, it looked like it was bucking the trend because this is dollar positive. I mean, if you look at this, everybody's calling for sort of, US dollar, it's going lower and the economy's screwed and all this kind of stuff. And yes, that may be true, it's going lower. Yes, it may be true that they're not doing so particularly well. But, if you look at this as an individual print, and this is what we need to do when we take these larger bits of data, this is actually not too bad. You know what I mean? If we sort of look at where the numbers have been previously, like, people are calling like, okay, yeah, 250, 300s, but, since February, this is, last month, which obviously we just see gets revised down, it's up the top end of it. So while everybody's calling for sort of like, oh my God, the wheels are falling off, it's crisis, yada yada, it's actually not too bad a print. So this is definitely dollar bullish. And then, the unemployment rate, 4.2 is not too bad, a level. And it stayed the same. So it's not creeping up. So again, look, it's kind of one of those things that not bad news is good news, if that makes sense. Um, Factory orders, look, not really something I pay attention to, but this thing's sort of, 0.5% up to 4.4. I mean, they're expecting an explosion, and, that is kind of pretty big, like a jump from month to month. So I don't really watch it. I mean, look at the kind of numbers you get normally, and now they're pumping up the factory orders. Hmm. Interesting. Anyway, so yeah, look, the reaction. I'll get into DXY first now, just because of this sort of bit of data coming out, but. Yeah, certainly very interesting sort of time with it all. Have a quick look at what we've got coming up because we've actually got quite a big sort of week coming up now. So into May, if this wants to tick over for us, and this will be the next month here. So look, we've got bank holidays, bank holidays. What are they having now? There's a lot of bank holidays around this time of year. There's always something going on. Uh, sorry, Children's Day. It's a very Japanese sort of thing. I think they've got Old People's Day or something as well, don't they? Anyway, so we got bank holiday on Monday. We got, UK's got a bank holiday as well. China, that's another one that we got to sort of discuss as well because, that is breaking some serious levels with the yuan. Um, they were on holiday as well. So I've got a thought that, and we'll obviously see how it plays out. And that's the whole point of these analysis things. You don't know, but you got to give it an idea. When they come back, maybe they'll come back firing on Monday. But they were on bank holiday, and the one got bought up hard. And this is what I was saying yesterday, but I'll get to that in a moment. Um, so apart from that, look, it's pretty quiet. We've got job advertisements, inflation gauge, and that for Aussie. So a little bit of Aussie data. Aussie's on the breakout level as well, yet to sort of really, really sort of commit to the top side. It did actually put in multi-week month highs, but still felt a little bit sort of low of like really sort of an explosion confirming the breakout. Um, Moving forward, we've got ISM data. Again, look, 50 is the baseline for these sort of ones. So looking like a little bit of a slowdown, nothing too exciting there. But again, look, these are the things you got to pay attention with these numbers. If these come in hot, if these come in further and stronger, the market's pricing for everything to be rubbish from Japan. From Japan, sorry, I was reading this thing. Everything to be rubbish from America. So any positive data is going to be really welcomed with US dollar and DXY. Tuesday, bank holiday again. What are they having 2 days for the? It's Constituent Day and Greenery Day. Jeez, interesting. Another bank holiday for Japan. Jeez, long weekend for them. Moving forward, we've got building approvals for Aussie. I mean 0.3, 0 point negative on it. I'm surprised this would be down. I mean, you know, all the talk is about housing, 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 and this is moving backwards. Like it seems like an obvious kind of fix, doesn't it, to try and sort of address the housing issues that we've got over here. I mean, I know they're everywhere, but specifically for Australia, month on month, and they're dropping down negative and moving backwards. Seems counterintuitive to sort of try and actually want to fix the problem. But moving forward, again, nothing sort of super. So it looks like a pretty quiet sort of start to the week in terms of data. Got unemployment out in New Zealand. What are they doing? Their unemployment's up a little bit high, so 5%. Certainly a little bit worse off than Australia and America. Um, talkers, speakers, no one. Okay, so Wednesday night slash, I guess, actually, let's just call it Thursday morning. Call it what it is. Thursday morning, 4 o'clock. We have Fed looking to have their rate decision in that. So FOMC and 4.5%. So they're looking to hold. I saw an interesting article on this just before, actually. I will see if I can just find. All right, so where we go? It was. So this isn't the article, but this is sort of basically the Fed rate cut expectations. And as you can see, it's sort of like, this is kind of where they expect it to be, fully priced cut, blah 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 blah. It's zoomed right up here. And these kind of things, look, they're not the holy grail of it all, but there is actually some sort of method to the madness with this kind of stuff. I also sent this to a mate before, so this is the little explanation, basically just roughly how they sort of calculate these things. So there is an actual method to this stuff. It's not just headlines. I mean, when I looked this up before, they were sort of saying that there's two ways that they sort of do it. One is through this sort of calculation sort of rate. Obviously, this is in terms they're referencing the RBA here, but I guess the theory is still the same. There's these markets, these OIS, was it overnight index swaps that sort of people are trading. So I think actually, where's this one here? Yeah, overnight index swaps. In further, the markets are pricing expected policy rate changes. Survey-based methods, on the other hand, blah, 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 and that's what I'm saying, yeah. So like the two ways is obviously through this, which is a bit more sort of like, people are actually trading these things, so you can get an actual idea of where, based on what people are holding. It's like sort of saying, hey, how is a stock priced? Well, it's priced at what people have just paid for it. So there is an actual hard, fast sort of thing. And then the other way that they say is sort of like, interviewing, interviewing sort of economists and that. That's the kind of stuff that gets a little bit iffy, I would say. Yeah, and sort of like, sort of like other market participants or surveys and that. That's where stuff can get a little bit grey because, you can get back, everybody's got their own agenda with stuff. And, when the people are saying, oh, it's sort of like, it was a good article the other day. I was sort of saying, everyone's getting bullish on gold. And one of these banks, I can't remember, it was one of these American banks was sort of saying, oh, we see gold at 4,000 by, I can't remember, Q2 this year or Q2 next year or something like this, right? So 4,000, Joe Sixpack looks at his looks at gold prices, sees it's just gone up. They then read this article from these banks, sort of, wow, these guys are in the industry. They know, and they say it's going to 4,000. Wow, I better buy some gold. And look, they're probably right, but it probably will go to 4,000 at that time. But it just sort of seems that, they're printing these articles not as the price is going up, they're printing these articles as the price is going going down. And so, Joe Sixpack buys his bit of gold, and these guys just sell into it. So, when people sort of coming out with their sort of opinions, that's what you take as a bit of a grain of salt. But these sort of more sort of things where you can actually sort of look at some actual data, and then sort of go, okay, how are people pricing it? Not what are people's sort of thoughts or theories with it all. that's something you can use. So back to what we were talking about. So anyway, look, they're pretty much expecting a holded, uh, they're pretty much expecting to hold rates flat. This is going to add not necessarily to US dollar strength because you know what I mean. They're not raising rates or anything like this, but it's just sort of like not weakening based on the fact that they'd be cutting. So, and I think that's something that's very interesting about that sort of NFP data that came out last night that beat expectations. As I said, like if you've got jobs being created, if you've got unemployment flat, well, it doesn't mean you need in that specific scenario to give it a helping hand, and a helping hand translates to cutting rates. So if you don't need it, they don't do it. That's the thing, and they can see how they can sort of hold this flat. So expectation now feels very much that 4.5% they're going to hold the rates flat. The press conference, as always, half an hour later, that's going to be the one that sort of gives it a bit more of an idea about where we're going. So pretty quiet start of the week. Thursday morning is when we're going to start to see some actual movement. We may see things price in this, and by price in this, I mean sort of like not necessarily. I think sort of US dollar is still in a position to sort of break out. I'll put that up in a moment when I get to the charts. Keeping moving forward, we got so we're looking over in UK. They've got their rate decision as well, so it's getting quite busy towards the end of the week here. Look, they're looking to cut, and again, GBP makes up part of DXY. A weaker GBP would lead to the idea that there would be a bit of a strength with, does it sound a bit poxy there? Leads with a bit of a strength with DXY. They do it a little bit different with the UK as well because they give these breakdowns of the numbers and the expectations of how many are hawkish, how many are this, how many are that. So it's just a little bit of a sort of little thing that they do differently with the UK. But they're looking to cut rates, it seems here. So you may see a little bit of weakening of the pound leading into this. Not that I trade the pound, but something to be aware of, and obviously it makes up part of DXY. Numbers here look still relatively in the ballpark. I don't follow these a great deal. I mean, obviously they come out every week, and you can see it's been pretty much non-existent. I was listening to some guy talking about this the other day, and he was saying, look, till this pumps up to 400,000 or so, then you probably don't need to worry so much. So you can have a look a bit at the data here, and I mean, if we take that, I mean, 400,000, come on, what the hell's this? Oh, geez. Oh, of course, that's 2020. Kind of skews the chart a little bit, doesn't it? But, if we sort of go, okay, 400, where are we looking at? That's back in July 21. So, I mean, in the scheme of things, like take out the whole idea of 2021 or whatever, it's pretty flat, and it has been for quite a while. It's quite stable through here. So I can see what he means in sort of in the sense of let's say you see a spike up, that's not really, I mean, it's in a band. It's just going sideways. Like if this was a chart, it's consolidating at these levels. So not really a great deal to worry about there. So I see the point. Continuing forward, nothing super of note. A couple of speakers, unemployment, and then, wow, a whole bunch of speakers. There must be something going on here. Why they're all sort of speaking, going through Saturday morning there as well. So if they say anything here. Listen to those. No. Okay, just a whole bunch of speakers to finish off. So pretty much quiet start to the week. Thursday, we've got a couple of rate decisions happening. Not much Aussie data. And we'll see how things affect that. Okay, onto the charts. So let's start off with DXY because this was, as I said, an interesting bit of price action around this data. So breaking it down, this is the candle, this one here, where the data came out. And as I said, we beat expectations. Move up was expected. It happened. Market said, that's great, let's sell into it. Poof, and they hammered it down. They had been selling it all day. I mean, obviously, we've just come off the back of a big sort of push up here, hit into resistance. And this is what I was saying yesterday when we were sort of doing this thing. We were sort of going, look, buyers are moving up, buyers are moving up, buyers are moving up, buyers are moving up, coming into this area here. This is a resistance area. It's a very crucial area. This is 140, or so 100.40 is what I've been calling for a confirmation line for probably since we were back around here or so. You know what I mean? So it's had a fair bit of work in that to be done to get up here. We could see sort of this looked like the buyers were saying buyers were stepping up, buyers were stepping up, and failed. Bang. They give it another go here. I was thinking about this. The reason I keep these previous sort of failed lines on here is so you can see how the market has reacted after it as well. So it's not just sort of like, okay, here we go. Looks like it's going up, looks like it's going up, bang, fail. Here it looks like it's going up, bang, fail. So we can see that even though this looked like it was ready to go with a little ascending triangle and it failed, it still took out the high after that move. What we saw after this data was a big move up prior to it, a couple of days, sold down all through Friday's session in the lead up to it, which is fair enough because the market was expecting a low number, so you could say people don't want to hold dollars if that came in low. Well, it confirms that kind of move, and they sold down coming into it. The price action after it, though, this little move here is what I couldn't, and I still, off the top of my head, I can't explain. Other than sort of like, tinfoil hat conspiracy theorists of it sort of being manipulated, because this is what it feels like to me. This move down here, like, the data suggests that it should be going up. There wasn't anything to counter it to say that, boom, it should go down here, but it sold into it, and it sold into it quite hard. As I see, 61%, which is a great level, as we know. Very strong level. This was obviously back previous level where we'd seen buyers. We had it marked out, had it for support. This was the level that buyers decided to go, yeah, okay, fine, that's good for us. Now, sort of having traded DXY for a while and that, I know it's not afraid of deep pullbacks. As it broke down through these lows here, I was even prepared for it to come down to these kind of levels over here around the 78, and I would have still said, okay, yeah, there's something in it. But as we can see, it came down here, found support on the 61%, and then bang, into the end of the week, they bought it up. So yeah, it's not, yeah, no, it's not breaking out. Well, hasn't broken out as of yet. We've seen it can look like a technical breakout setup coming, bang, fail, and it still goes again. Bang, fail. This has still got a chance to break out. If you look at this on a weekly, might have to clear these things. Actually, can we do it on this one? This is on the weekly here. So no clear breakout. I mean, a big solid candle here would have been great, but this goes into this little plan and idea that I was sort of thinking. As I said, I don't do Elliott wave kind of stuff, but to me, this seems pretty, 1, 2, 3, 4, whatever. I think I did it on a daily. Yeah, this kind of flow here. Anyway, whatever, let's stick with the weekly. From the weekly, oversold as all hell. Doesn't mean anything because, I mean, technically it's been oversold since 107. But, oversold as absolutely anything. You've got a whole bunch of wicks at the bottom here. It looks like it's curling and ready to move up here. We saw quite a strong close into the finish of the week. And it's sort of like moving along. Look, I could see maybe a little dip down as I put a bottom wick in, but I could see this catching on and moving through this week from just a sort of little flow here. Doesn't mean that it's necessarily breaking out, hence this A, B, C corrective kind of move that could potentially sort of be happening here if this were to be the Elliott wave of it all. But as I said, look, this is certainly setting up where, you could see this thing move up. And look, it could go to 101 and then fine. We've seen the sellers come in every time and knock it back down from there. But I would not say that this is about to necessarily, and look, anything's possible. We could just see one big fat candle come down here. But I'm still in the belief that this looks like it wants to sort of curl, roll around, and it'll put in at least an attempt to the top side here. So I think sort of that's the kind of thoughts that I'm going to be taking into this week, particularly with, the Fed potentially holding and maybe they come across sounding a little bit more hawkish. That would support an upside move. Obviously, if they come out with a dovish tone to it all, bang, it's going to be weighing on US dollar. But, the pound as well looking to cut. Got to see where these other central banks are a little bit at as well. But they're the two that are coming out this week. And from just a weekly standpoint, this looks like it could be curling around to have a little move further up. So we have a look on the daily. Look, it's still really, let's get back on that other chart that we're using. It's still really, as I said, coming into that resistance level that we wanted to see a breakthrough. But this little inverted head and shoulders, I think could very much still get a breakout. 140 is what I've been calling for the last couple of weeks or so, or a week or whatever it was, around this zone. And this is why I don't like necessarily these little sort of angled inverted head and shoulders. I guess if you wanted to say that, you could say that, look, this actually, if that were to be the case, that's your little resistance line. This could just be seen as a back test. Falling resistance, breakout, back test, buys came in. You want to see an accelerated continuation move up over here. Otherwise, it is still in the camp where it could just roll over back down over here. I think certainly down under 99 or 98.80, whatever, that's just kind of like, okay, bang, we're going for the next leg. But I could see this potentially sort of, as I said, moving out and breaking out to the top side here. RSI, it's moving into the overbought, but it's not overbought. It's still quite wide apart. I think we'll see how we go. Maybe an early dip down come sort of Asia open, and then maybe a little bit of a move back up. But as you can see, I mean, look, end of the week, we say we disregard that last candle at least. But that's quite a bullish close. You know what I mean? That's it's not fully engulfing because it didn't come down here, but pretty much engulfing that whole candle and closing on its respective highs. You know what I mean? You can see this didn't quite get down to an oversold area. This is only just down around 40. I can see that momentum carrying through to early Asia on Monday. But again, look, it'll be interesting because we'll get China back and we'll sort of see what they have to say about the stuff with the flows. But 140 is the top side move there. I think if you take out this sort of 61% retracement, obviously the lows of that drop down there. If you see that, then you're coming back to test your major levels down here. Major levels down here, we'll see that kind of move. But, see what happens with the buyers at this level here. I'm still looking to the top side here. All right, so move on to gold. And gold structurally working well. As you can see, we got our breakdown. We've got our retest. Now we're trying to see if we can drive down for the next leg down here. Obviously bought up a little bit into close, but from a strictly structural standpoint, that's a great rejection. Whoops, this one here. That is a great rejection. And this is what I was saying the other day, that, it was held so many times through here. There was two things to happen here. One was the rejection. You can see rejected, tested again, rejected. Or two was it would go straight through. If it went straight through, then this would have been classified as a fake out, and we would have been going up over here. Like I think it would have just been fake out, squeeze, bang. As it is at the moment, it's obviously in the middle of its new little range, which is sort of like, 3,200 to 3,265 or so. I think though that this is, as I said, this next leg down. I think this is what we're looking at here. Bang, bang, bang. I think sort of like you got to at least honor this move down here and then sort of see what happens at 32 or between this 32.10 and 32. But again, you got to sort of pick where are we in the the flow of these things. And this is what I say each time. You come down, whoops, let's make this direction. You come down, you find support. That's fine. We move up, find resistance. We attack the lows of that low there, breaks through. Cycle starts again. This becomes this leg. So you got one move down, you move back up. You find resistance at previous supports. You attack the lows, attack those lows, break through, bang. This one here actually obviously went all the way through, so it came all the way down here. Make a new low, finds support, moves back up, finds resistance, previous support. Now we're in this leg here. So this leg's quite interesting, well, vital. I think it's going to come down at least test 32. This could be a move that continues down here. It could find a double bottom up here. Or I'm not in the camp of this, but it could be also be a higher low, which would be this. Whatever, charts, arrows all over the place. A higher low, which would see a little bit more of a swing reversal. But again, you know, all things sort of considered with it all, I think that sort of, you know, if we do see that breakout in US dollar, I think that's going to make it very difficult for gold to get back above here. Mainly the fact as well, let's get these all off here. Mainly the fact that it worked very hard to hold this line. As I said, and this is what I was saying yesterday, sort of like, you know, with the structure of these things, people are buying it, bang, they did well. People are buying it, they did well. They bought it, they did well. They bought it, they did okay, better. Not too bad. I mean, look, even this last bounce here went 50 points. You know, not everybody just sells. We saw this really fast move here under the stops as it happened. I was recording, I think that was on the Thursday. And it went bang, boom, boom. And this was a great short trade down here. The bounce, you know what I mean? It was probably a little bit stronger than I thought, but structurally, it's working perfectly. And this is the thing. If you've bought this level here, or say you've bought this level here, you've done very well. So you keep doing it. You keep buying, keep buying, keep buying it till it doesn't work. Or it didn't work. Okay, that's fine. You hold it for one day, it bounces back up. Well, you know what? I made money, made money, made money, made money. This time I didn't. I can get out for zero. All right, I'm out for zero. That adds sell pressure. Once, twice, and it moves back down over here. So you got to see what the resolve is of buyers at this level down here. We do saw it as pretty much like, you know, it's a big round number. It's that sort of support area from, you know, back on the way up. So, you know, back mid-April. So, you know, but it's not a major level. So again, look, I'm still thinking that we at least test the buyers at this level at 32. And then if they're not there, because it's not a super major level, like, I mean, by major level, I sort of say that one touch, two touch, three touch, like, you know, you can see the market was buying it every single time it came here. We only really had, I guess, this one little thing here, back test, and then up there. So, you know, this is not exactly the same equivalent to this kind of level in significance. So I don't think the buyers are going to be sort of super hard to defend it. We did see just below this, at the 61%, quite a strong reversal from this level. So yes, it's only one touch in there, but that was where they really started the trend. So, you know, you got multiple touches into a level, or you got a big reaction from the level. They're the things that are sort of make it a little bit more significant. Round number holds some significance, just mental factor. And also, you know, it was a little bit of a support, so there's a little bit there. So this sort of stands to reason that you did get a bit of a bounce from here. Sellers came in on cue. Now let's see, is this the vital, is this the line in the sand that they're really going to fight to defend, or are they going to sort of let this thing go? I think they let it go. I think we look at this kind of level over here a little bit more, and as we drag it up and we make it a little bit more sort of zoned out, so moving around here, you know, we've got the top side of, and this is actually going back, this big blue line through here is that massive channel that we were sort of trading off before we went berserko and blew out to the top side. And that's timing out pretty well. So this confluence is just building and building, in my opinion. We've got, let's make that on the top there. We've got the 61% of April's move. We got the 38% of 2025's move, like from January, which just shows how ridiculous this move has been. And also we've got the previous highs. To me, that's 4-point confluence. And yeah, as I said, yeah, so we've got the top side of the channel, 61%, 38%, and the top side there. I imagine a strong reaction from here. Should you break here, well, that's what I reckon will happen. but I don't think that will happen in one go. I don't think it'll fly down through here. I think the 32 will break, but I think 31.60 I think is going to garner quite a bit of attention, and we might get a bigger bounce, up from there, 150 bucks. So we'll see how we go, sort of what happens here, but that's the level that I'm sort of targeting. All right, obviously negated above 32.80, back up here, and then you're back up into the range. But for the time being, I think this is probably the direction that the market would like to take it. Just see if we can put a new make this into a new little channel, perhaps. See if this holds any significance. And again, moving down over here. We'll see how this. I might clean this chart up and that to sort of show a better picture and put it just on X, just to sort of emphasize this. But should this be a little bit of a channel, well, that's obviously pointing down to that bottom there as well. All right, flip along. We've got silver, and silver's which chart were we using? This is the one that we're using. Bit messy, yes. The bounce came a little bit higher than I kind of thought it would have, but again, look, it's up in this area. We can see the sellers have moved down this little zone here. So this is now where your sellers need to close above. So you need to close above 32.70 should you want to be back in the game to be going higher. But we've come down, we've tested lows, broken through. The bounce here, as I said, quite a strong bounce actually off the bottom there, 31.60 odd. So a buck bounce up to the top. But again, bang, they sold into. And this is the thing that I sort of think makes me think that, it was just a little bit of a sort of a fake out move after NFP, because we saw all these things bounce right up. Well, silver actually wasn't doing too bad, but it was holding up around here till they let it go, and then bang, closed back down here. So look, it is certainly. Whoop, that's a little small. We can just say. Certainly looking like it wants to sort of move a bit lower. I wouldn't be sort of like going, yay, let's buy this now. Maybe you could say, well, I mean, technically this is high or low, but this move's not stopped. And this RSI looks like it wants to continue down. Any sort of move up, I think, into sort of 32.16. If this thing doesn't just gap, which I think is a likelihood as well, any move to 32.20, I'm going to be looking to sell into, and I'm still targeting 31.30. I think that's still where we could be sort of looking, if not lower. I actually think this could potentially go lower. You take out those wicks, I think that's just really sort of confirming this. So let's take a couple of these highs, mark these ones here, see if there's anything we can sort of go on here. That's a reasonable sort of looking little channel, I suppose. This one obviously overshot and then the harsh reaction. With these really fast big wicks outside channels, not that this is a full channel as of yet, but it's lining up okay. I'm happy for these things to overshoot the channel, because obviously price shouldn't have been down here, and hence why they bought it up so quickly and big. That's my interpretation of the flows. But yeah, this 31.30, 31.40 is where I'm sort of targeting next. Price target there. And yeah, below that, we can really look down to here at this next support level. Should we break through there? So there are two targets, and then 30.50 after that. I think that's a pretty straight little shot down there, should we break through that level there. All right, flip along. We've got Aussie. And this is the thing with Aussie, I was saying, sort of the bounce on this has been an absolute headache of a trade, to be honest. And it really did push, push, push. And look, all in all, this is a high close. You could say, look, it's broken out. This is a little back test thing here. I'm still cautious to buy this thing. It wants to go. It's certainly it was absolutely defying everything through that session on Friday. It was that little fast move up just before anything sort of kicked off. And yeah, it just sort of really kind of continued. I mean, this is on the 4 hour, but you have a look on this lower time frame. And this is the thing as well with with that NFP. This was the candle. It shot down here and then just shot back up. Shotgun, whatever. I was looking for the word. But shotgun back up here. So yeah, that's from 41. Sorry, 41. I told you got dyslexia. 64.10 to 64.70. That's 1% move from the drop down move there. So it's not too bad. And look, end of the day, it is obviously, if you look on a weekly, it's breaking out through there, certainly up moving into these levels. It's just, I don't know. I'm still waiting for a pullback. The pullback, I think this is maybe wishful thinking now. I think certainly you're starting to look more in this upper area. So maybe pullbacks to 62.80 might be the go for it all. But you know what I mean? I don't know. It's just, it doesn't strike me as the kind of thing that now we're just going to see a massive candle out the top up here. I think it's just it's pushing out. It's certainly grinding. It's squeezing. I imagine the people that got in down here. That's great for them. With the other Aussie chart that I use, this is the one that shows the squeeze outs that Aussie does on a weekly time frame, and we've seen this. You know, I've always sort of earmarked this one here, and I always come back and reference it because you know these supports and then squeezes out. This is a massive reversal here. So it stands to reason, but with this big bounce up that you would see some sort of continuation of the move, it just to me feels a little bit non-committal. I don't know. It just, yeah, I'm still cautious to be buying this thing at the moment. What's that big yellow line? That's the 61% of, what's that? That's the, what's it called? COVID lows. So to put in context, Aussie back down, it bounced off the 78% of the COVID lows, which is just crazy, crazy. Back onto a smaller time frame that we can, you know, hopefully apply something to. Take out the highs, you see continuation. Look, I think that's the simplest way to sort of put it. You can see that this is just a strong box of consolidation here. We've broken out and it is consolidating out the top side. So what you want from here for an Aussie continuation is above the highs. That's, I think, the best thing you can say for it all at the moment. I'm still not super convinced that this is going much, much higher, but we'll see how we go. That's the level. So take out, you know, 64.70s. Then basically what you've got there is consolidation, break, retest, you need higher high. So same sort of thing that I was talking about before. You know, this is your flow. You found your resistance, back find support, support same as the previous resistance, through here. You now need to have this third leg to come up and test here, and you want to see that break through 64.70, and then you're probably going mid 65s, I'd say. Should it fail to break through here, well, that leads you to a lower high, which is in failed breakout territory, and then back down. So I would say to sort of confirm that, you're probably looking underneath that wick low, so set 64.10, to sort of see that this would move back down. And should that sort of come like this, then I imagine you come back down, you test these support areas through here, you know, 63.70s, and that could potentially lead to that breakdown there. So I think let's put an alert on this one. I'm going to call this failed breakout. Should it come back down into that zone? Should we see DXY and US dollar get bought up across the board? A move up above here, put an alert here. That's a higher high on breakout, target 65 plus. I think they're your two levels to sort of look for Aussie, sort of come, you know, early week next week. As I say, it's pretty quiet on the data front. US dollar starts to get bought up and break out, more likely leading to this scenario. Should it get smacked back on its head, well, then we're looking up over here. So I think it's important to keep an eye on what the market's doing with US dollar and also the yuan, because as I said, the yuan is also breaking out sort of to the downside, which is a stronger yuan, which could obviously, you know, stronger yuan. Aussie's very sort of touchy with that kind of stuff. So they would be looking for a sort of continued strength of the yuan. All right, move along. We've got copper. Copper fighting for this bear flag. This is what I was looking for. I'm still kind of in the camp of this. It's really kind of flying over everywhere. We've got a big breakout, and this is the thing as well. Like as I said, data dropped, which was it? This candle here. NFB dropped, and we saw US dollar sell off a little bit. So if you unpack this a little bit, I was thinking about this, like because obviously all the metals they can, as a whole, kind of run together, but they serve different purposes, or at least gold and copper do. Silver can kind of wear both hats. Like it can wear a precious metal hat, but it can also wear an industrial hat. I don't know if you saw that um, Musk thing. Apparently, some cringe joke about he wears many hats. Even his hat wears a hat. Yeah, so yes, just saying it now does sound pretty cringy. Anyway, so on with the chart here. So look, it is still finding this little channel. So this is the massive impulsive move. We've got to grind up here. I think this still needs to come down, at least sort of test these lows over here. We have seen a lot of V-shaped recoveries across the board, particularly with silver and gold more recently. Um, sorry, silver and copper more recently. So, I think that's what people are thinking. This thing will just continue to grind back up. I don't. I think we will get a breakdown, at least to sort of test the, 4.5s. You break 4.5, then you go down to your buy zone. Update this a little bit, take it from the highs, move this up a touch. That's your little area that I'm targeting, 4.3 should this break. So this is the area here underneath these lows. That's when you move towards target. But before this, structurally, you've got to deal with down, find support, up, find resistance. This is the leg we need to see, in my opinion. So I think this is still yet to show its hand. I think we're still in this leg here. But should this leg break this channel, then we're in this leg here. And this is the leg where, as I always say, repeat, because it is double bottom, lower low, higher low. Higher low, reversal, double bottom, range, lower low, continuation. That's the kind of outcomes I'm looking for copper. But I think sort of the fact that it broke this bounce, look, it could be, this is the initial sort of thought, whoops, the initial sort of course of action that I thought. Back down to this zone. I think I had buys around this area here, and then I was like, no, I came down too quickly. I was like, oh, we'll move down here, got a little bit cautious. But this is the idea. Come back down here, bounce and buy up, and move up to that move there. So, look, it could just be that sort of up, like, zoom out a bit. It could just be this move. And we're in this leg here. This leg of this larger kind of structural move. And maybe we're coming up to put in a higher low here. So if this one fails, which would actually be that middle leg here, see what I mean? Like it builds up from one time frame to the next. But should this fail here, attack the lows and then come down and break through here, yes, you've got the low time frame bear flag playing, but you've got a larger move at play, which has definitely put in a lower high, which could lead it to coming back down a lot lower. So what I'm kind of looking for is a clear break of this channel. And probably I would say now, because we did get that little wick and then bought up as well, a break of that wick down here. Targeting lows for the continuation. So that's the level there. I mean, look, you go above that, I still think you got some resistance you got to deal with. You got to sort of solve that kind of stuff. Let's drag this across because this is a previous level. So we've seen the market price it a little bit through here. It's kind of chopped through it a little bit. So it's not a major level. But obviously, look, yesterday they sold it down from there as well. So look, same sort of thing. Higher high, I think you may grind a bit more, but I'm not looking to buy this. I'm looking to sell. I'm looking to buy at 430 or 450 if we find another lot of buyers here. But 450, 430 should that break through. I think that's the sort of areas that I'd be looking to buy. I wouldn't be buying it here. Well, I'm not buying it here, I should say. Cool. And then finally, just with China, we got major level broke here. So this is quite an interesting session. to finish the week off, because literally I was saying yesterday that we're seeing this grind and it's quite sort of, held. And then it just, as soon as I said that, it just went whoop, and it was just absolutely hammered. So this is interesting because I said yesterday, I think it was yesterday, the Friday session, that I was talking about how bank holidays can affect markets, and you can see one of two things, either dead flat or you can see moves completely accelerate. And this is what happened yesterday. It was a one-way trade all the way down through here. And as you can see, we're breaking lows. We're going back to testing. Actually, you broke that low. So we're going back to November to have these levels before we sort of came right up into this big sort of consolidation zone over here. So this is why I'm interested to see what happens with Monday when China comes back on board. Are they going to sort of just bang, bash it back up here? You know what I mean? Sort of like, you got to sort of say, and this is like me sort of thinking on the fly here, but China wanted a weaker yuan. Well, they're obviously sort of having a lot stronger yuan here, which is going to make it a little bit more difficult for them to sort of counteract that sort of uh, tariff kind of stuff. There's little bits of talk on that, which I'll get to in a second as well. But China said, "Hey, look, we're not going to let it explode. We obviously sort of test out the top side." But then they're on the bank holiday. It's not like everybody's gone, but you got to accept that there's going to be lower volatility or lower volume coming from that direction. Was this just a complete shakeout move, and maybe we see this thing push back up once China comes back on board? I'm not convinced that this is the major break here. I think this should have shown a lot more and gone bang out here. Plus, with US dollar um, being sold off, it didn't impact this at all. Oh wait, so US dollar being bought up. So yeah, this is US dollar being sold off. So think about it the other way around. So US dollar being sold off goes in line with, because this is USD CNH. This is US dollar weakness as this comes down here. One strength, but as you saw, there was a big push back up into the end of the week for DXY. There's no reaction with US dollar against the yuan. They closed it on the lows. So very inverse kind of thing with what they're doing with the yuan there, compared to what they're doing with, or the US dollar there, as what they're doing to the US dollar compared to the other major currencies. So I'm open to the idea that this could just springboard back up here. And this is, again, why I'm sort of cautious about Aussie on its breakout, because if this thing moves back up over here, I think that's going to sort of knock Aussie back down into its range. Should this break down over here, this is a major level. And, quite frankly, I'm looking down over here near 706. But I'm not, again, I'm a little bit cautious. So let's put an alert down here. Call that a major breakdown under 720. Like 720, give it a little bit of room to breathe. Just the 720. But yeah, underneath 720, I think that's confirming that this range is broken. If you were to sort of look at that in terms of a range breaking, I mean, it's quite a strong sort of range. If you take the general points of it all, your measured move here comes in pretty close to sort of price, obviously depending when it sort of comes down here, but that's kind of your measured move from there, which, in time, depending on how fast it comes down to it, could equal these lower support areas. So yeah, we could be in for a major break here, but I'm cautious about it because, particularly just this last candle, they're still selling US dollar here and buying yuan while they're buying US dollar across the board. There must be something more to it there. We did see a headline into the end of the week as well, which could, I suppose, actually justify this away a little bit. If we get down onto the 1 hour, it was 2 o'clock. So this candle here, boom, boom, and then they sold into it. This was a headline of China saying that they were going to use the fentanyl. Oh, sorry, I should actually pull up the article, but I can't be bothered. It was about they're going to use fentanyl as part of their discussion talks and that, because obviously the drugs coming into America from China has always been a big part of it, and sort of China is basically refusing to do much about it. Um, but now they're using it to their advantage a little bit as a sort of a bargaining chip, so to speak, sort of with this tariff talk stuff. The market sort of jumped on this. Aussie jumped on this. Equity markets jumped on this, but it's just a headline, and it's just a they're thinking about headline. So you can see that knee-jerk reaction. If you look at these things all at once, I think where is it? 2 o'clock. Oh, see here, bang. So move down, moving down. Obviously, if trade talks are better for yuan or better for China, so strengthening of yuan, boom, moves down, moves straight back up. We've got Aussie at the same time. Where was it? I think it was this candle here. Yep, 2 o'clock, bang. Oh, what? Maybe resolution resolved. Boom, sold down into. So, these things, they're headlines, but they're not sort of things that shift what I call shifting the landscape. It was just like, okay, boom, boom. And they give you a little taster of what could be to come should once these things are resolved, but they're not going to be resolved overnight. So, when you see a little move like that, bang, you bank on it because 2 seconds later, or 20 minutes, half an hour later, you're back up to where you were. So you may as well bank on that little headline when it's available. All right, that's it from me.